So this is our timer business panel. We tried it out last year. We got some really good feedback, so we're bringing it back again. We're really fortunate. We put our heads into it this year. A lot of the questions last year are around financial topics. So we've got Scott Sutter. Scott is from the Boston area, and he has a background in commercial insurance. He's going to talk a lot about Race Insure, which is our race cancellation insurance partner. And but beyond that, bend his ear a little bit on general insurance requests because timers in general are probably underinsured or improperly insured, specific to your business. We're going to have him talk a little bit about that, and then we're going to have Matt McMorris talk. So Matt is a CPA. What an odd combination of things. CPA, timer, and race producer. And just genuinely nice guy. So I think for all of us, I really wanted to bring Matt up here too because I think there's a lot of financial planning type questions that, whether it's here, and again, I promise you, if you buy Matt high quality alcohol, he can answer your questions better. So we'll go ahead and get started with Scott. I'm going to just kind of lead the question, Scott, and then you guys will come up here and answer your questions. So Scott, can you go ahead and explain the difference to us between race cancellation insurance and runner registration and liability?
Sure. Again, my name is Scott Sutter. I'm out of Boston. Not only am I an insurance agent, I'm also a race director and a race timer. I got into the race business accidentally back in 2010 when the local race that started was having a lot of trouble, so I stepped in and volunteered accidentally. So I've been a race director since then. I've turned it into, we do about 12 different races during the year. And I time about 12 different races. So we're very small, but I'm involved. Our marquee race is called the Arena Attack. It's in the middle of winter up in New England where we, one day I thought it would be a great idea to host a race in the middle of winter inside an arena because it'd be out of the snow and whatnot. So I called the local arena in Hartford. And I walked out of my office and I looked at my wife and I said, I think I just rented a 20,000 person seat arena. And it worked. So we've been doing that for 8 years, and we've been a partner with RunSignup since 2015. So that's just me in the background. I'm also a former runner from the Citadel. I ran cross-country track for them all 4 years. So both the race directing, the race timing, and now ensuring all of that is my evolution in this community. So to address Brian's question about the different insurance. So there's liability insurance is used as, if there's any race directors in here, the event liability insurance policy covers your liability as a race director because you're responsible as a race director for everyone that is at the race. When they arrive on site, whether they're a spectator, a volunteer, or a participant, as they move through the race, and then after the race, while they're at the post-race party and whatnot, until they get back to their cars and they leave, you are responsible for them. So there's a specific insurance policy, event liability insurance policy that you need to purchase for that exposure. As race timers, we are not responsible for any of that. All we are inventory control. Number comes in, we track who comes through the door, right? So all we're responsible for is collecting that finished result. So we've designed an insurance product specifically for that race timer. Really, the underwriter just understands what the exposure is. We took a lot of time educating them. We also build in a professional liability coverage that if in case you mess up and you get sued by the race director, sponsor, whatnot, there'd be some coverage there. So there's that liability as your timer. Then there's the cancellation insurance. There's two different types of cancellation insurance that Brian alluded to. There's one for the race director that the race director buys. Then there's the other insurance that the participant purchases. The race director is going to buy, for instance, the race insurer, which in case you have to cancel for some unknown reason, a hurricane's coming along, you get your permit pulled because of some sort of air quality, and you have to cancel the race. That's where we we cover your costs and your profits. This way you make sure it allows you to refund your runners and also cover yourself, so you're not at a loss. The insurance that the participant purchases, that's in case they can't make your race. That's in case they get sick. Work pulls them in a different direction, they can't come to your race, it will refund that individual runner for them missing the race. And I think I covered all that, right?
Yeah, I think the next thing is, for timers, the reason that cancellation insurance for your races, especially high profile ones, is important is if you know they bought it because you talked to Scott and introduced them to Scott, the chances that you get at least partially paid for a
Right.
canceled event is much higher.
Right.
It's also really bad for your book of business if multiple races, even if it's for unforeseen reasons, start canceling. It's going to hurt your market overall. That's an important thing. So you have an algorithm a little bit for calculating costs. So how does like a cancellation policy? How do you calculate the costs and maybe break it down versus running versus like triathlons?
It's actually really simple. One of the reasons when we built RaceInsure in partnership with RunSignup, in Kevin and all the talks that we had, we wanted something that was simple to understand and simple to purchase. The way the insurance works, if you have to cancel a race and we're going to insure it, we essentially look at your expenses, whatever your expenses are that you've incurred so far, we're going to pay them. And if you typically pay yourself $20,000, we're going to cover that expense as well, so we're covering your revenue. So you can literally take whatever that you've already received, you can hand that right back to your runners, so at least they get a partial refund, or however you want to artistically do it. And you also get to pay all your vendors, you get to pay yourselves, and you get to protect yourself for next year. And so it's very straightforward. There's no real algorithm, it's just plus and minus, that's it.
And if you guys have customers that are interested in race cancellation insurance, you can go to raceinsure.com.
RaceInsure.com. You can click quote buy on that website. There's three different options. There's the running, cycling, and triathlon. So the cycling is we charge 2% of whatever the limit of insurance that you're buying. So if you're buying a $10,000 policy, we're going to charge you $200. If you're buying, and just like for, I'm sorry, and it's same thing with running. It's always, running is 1% of whatever the limit of insurance that you bought. And same with triathlon, it's also 1% of whatever limit of insurance you bought.
And the important thing to note is that you can buy a policy at the amount that you need it for. Right. So if you're doing, if you want to buy it for $50,000 for a $100,000 race, you're welcome to take on that additional $50,000 in risk because you feel like you can handle that.
Right.
That kind of loss. So I kind of explain to people, it's like, what can you afford to lose? And that's the appropriate amount of insurance that you should be kind of.
Right. We'll go up to whatever amount that you purchase. We will not go over. So if you purchase more than you need, you're not gonna be able to profit on it per se. And just to clarify, I am not the insurance company. I am just Scott Sutter. I'm the bet maker. I'm the guy that went to the insurance company, designed the software, or had someone design the software, and now made I made the relationship work. The insurance company that actually backstops RaceInsure is a company called Houston Casualty. They're owned by a company called Tokyo Marine. Houston Casualty insures the Boston Marathon. They insure the Philadelphia Marathon. They insure all of SEC football. This is a big company that specializes in exactly in these type of cancellation events. And they have wonderful adjusters. We've had a few people that have posted claims. They might be in the room, I'm not quite sure. But we just had our first one. Our first one was with Hurricane Flo. When it came up, one of our races took a direct hit. It was an $80,000 loss. They got the permit pulled a week before the storm arrived, and we ended up paying out. And it was helped them out a bunch.
Yeah. To kind of wrap this up, one of the things that I really wanted Scott to talk about is Scott, as a timer, and also talk to other timers. What are you commonly seeing when you have kind of casual conversations with timers about their insurance needs that they're not maybe understanding or missing?
A lot of the time, the timers don't have insurance, and I bought the same policy that we designed. A lot of the time, even myself, because we really don't have a lot of liability. It's the race director that carries all the liability, so we would always just kind of ride underneath their coattails, for up until recently, where certain venues, townships, cities, they want to see certificates of insurance of all of the vendors that are involved in that race. So now the race director is now turning to the race timers and saying, hey, you're one of our vendors, we need to see insurance. So that's one of the reasons why we had to create this program. As far as I can tell, when we designed it 2 years ago, there was nothing out there that really fit the bill. So that's hopefully that answers the question.
Yeah, and just to clarify, Scott also has a policy specifically designed for liability insurance for timers.
Right.
So
we've been paying liability insurance for like 15, 20 years.
Yep.
But a lot of that is actually through our equipment insurance. So basically, not the automobile side, but our equipment was somewhere else, was at the events.
Yep.
And they tag along a $2 million liability.
Yeah, like a float, right, okay.
That's something you also provide as the control and also equipment, where it's only liability.
We could do, yeah, that's all stuff that we could do, absolutely.
Yeah, and that's an important thing to know about Scott. So Scott is a commercial agent, and so he can actually build stuff for you. Because I would say just about everybody in here, as you get bigger, you're going to need custom, and that's part of like what he brings to the table. That's why I wanted him here so much. Is that I think a lot of you guys could use someone to talk to better kind of understand like what you're missing, and he's the right guy to do it. Go ahead, Debbie.
I know me specifically, we have a huge liability insurance policy, and like you guys were just saying, a lot of the liability isn't on us. But lately, we've had a lot of race directors come to us. They want our certificate of liability
Yes.
insurance, and they want them named as a
Yes.
That's appropriate.
whatever.
Yeah, as an additional insured, right? That's what they, yeah.
Yeah, that's really, really common. I used to work in the transportation industry, and in order to get me on, like in the network that I was in, you had to provide that and name us, that company, as additionally insured.
And what that means is in case the race director gets sued because of something that we did as a timer, we would defend the race director. That's all that means.
To piggyback on her question, would you suggest reversing that and asking for us, the timers, being there?
Oh yeah, that's one of the advices I do offer the race timers and race directors is just get a mutual additional insured because I look at every week and it's kind of you look at these lawsuits that come across, nothing tied to races, but you get these lawsuits that come across and everybody gets named in the lawsuit. Everybody that could have touched it may have touched it. It's almost depressing that you see how many people get named. And really what happens is the attorneys just all get together and they figure out who holds the most liability or negligence, if any. And really it's up to the insurance and the attorneys to try to argue us off that we had no liability there, so we get off of the lawsuit.
So we're going to move on to Matt's section so Kevin can get some time. But I definitely hope you guys grab his ear, talk to him. I think he's got a lot of great information for you guys to dig into.
Thanks, everybody.
Before we get too far into my intro, I wanted to share that I got insurance from Scott. We had a Workmans Comp policy, and again, we didn't talk about Workmans Comp, but as it relates to custom, I said to Scott, hey, we've got this crazy Workmans Comp policy. I think it was $2,300, and shaking your head. We paid $2,300 for a Workmans Comp policy, and I didn't think it was appropriate. I didn't think it was right, but we had to have Workman's Comp. Some of the places, and you guys may also have this, they need you to have comp when you go on site, even though most everybody in the company, with the exception of Vanna, is owner. We didn't need it anyway. Called Scott, said that. I said we needed liability. He got my Workman's Comp and my liability placed for less than I was paying for Workman's Comp. So, little success story. Thank you, Scott.
So, I want to. There's one question I think, I really want to spend the time on.
Sure. Well,
I think you know the one. The most important question I think you guys should want to know the answer from someone as prestiged.
Sure.
Is if your company has multiple arms, which a lot of the companies here now have, and that's timing, race production, race management, and then also owning races, and potentially some people have other stuff going on, course marking or whatever. You've got all these different consulting things you're doing. Why and how do you recommend separating those finances?
Okay, I'll go a little bit into my history. I am an accountant. I'm a CPA. I've been doing the income tax side, bookkeeping, accounting, all that shit that you guys think is really boring and that you really don't want to deal with, but I do. It's my job. I've been doing it for 19 years. It'll be my 20th tax season. That's my regular job, and then somewhere about 10 years ago, a little bit longer than that, I got into triathlon. I've got a partner that says, hey, we want to do this stuff. No, I also have a wife, but this partner decided that they were going to do triathlon, so we got into triathlon. He started a small triathlon, then another one, and then about 3 events into it, we brought another partner on, and now there's 3 of us running a business. We manage between 7 and 9 events because a couple of them are, I don't know who manages them, is it us or them? And then we time 30-some events. So the we is Greenleaf Racing. My day job, I'm an accountant, MJM Tax Consulting. That's what I do for most of the time, and then I get dragged into this timing and management stuff, kicking and screaming. As it relates to multiple entities, we have MJM Tax Consulting. That's my regular business, my day job, which pays my salary and my mortgage. Patrick and Anna, full-time in Greenleaf Racing, me part-time in Greenleaf Racing, and then we acquired a set of races that they were grossing 100, 150 a year, just those races, but in the acquisition, we wanted to keep it separate, so there's another LLC. So we have 3 LLCs, MJM, Greenleaf Racing, and LLC that owns that race. That's the one that does the management stuff, Firecracker 4 LLC. So short answer is, how do we keep them separate? We have separate bookkeeping software for each one of them with different QuickBooks file for each of those 3 companies. Payroll is in MJM. I'm on MJM payroll, and I'm on Greenleaf payroll, and I work in Greenleaf. Anna is 100% on Greenleaf. But how do we manage it? There's a lot of detail management. There's a lot of stuff that we do on the accounting side to keep it separate, but really, you have separate bank accounts. You do all of the bookkeeping separately. You invoice from one company to another. You keep things. There was an Offspring song.
Keep them separated.
That's one. That's what you got to do. And I know that it's really tempting to say, hey, look, I've got this thing. Can we just blend this over there and blend it? But over time, I think you'll appreciate keeping your inventories and your assets and your businesses, is even if they work together, treat them as separate companies. Because if you bring a partner into one that's not in another or whatever, keeping things separated also helps from a management standpoint. At some point in time, you want to sell the race or sell the timing business. We can go back through years and years of bookkeeping and look at that and say, hey, look, this thing is this thing is that, as opposed to having these things commingled. It's very, very difficult to go back, 7 years later and say, well, there's this and there's that, and well, what about some of those things where it just doesn't work? You got to do the bookkeeping separately, ideally separate bank accounts. And I know it's tedious and boring, but there are people like me, and there are people, I guarantee you, in every one of your communities that either do bookkeeping or that are accountants that help you separate these things out. But if you can keep those things separate, it will help you evaluate where you are profitability-wise within that company, and also, does it make sense to keep doing this thing, which is always a question, right? Should we keep doing this thing or should we sell it? You want to be able to answer that question. So that's the bookkeeping stuff. I was going to talk a little bit, is anybody about a tax thing? Do you have a tax question on there, or can I go on to that?
I think it kind of rolls into it as like your experience as a CPA and how that relates to being a timer, because I think that's pretty interesting.
Well, for me, that the personally, it kind of works out that my tax season just gets over with when we have 2 or 3 overlap races, so I'm kind of doubling up, and I'm maybe only 2 weekends a year that I'm timing, and I'm doing the
pretty bad weekends.
Yeah, there's this one that tends to fall right at the end of this, on or about the 15th. And I typically don't go to it, but it's one more thing. And then there's one that's right before the corporate deadline, which is the St. Patrick's Day. So on the 12th, corporate deadline's big for me because we do a lot of S-Corps.
Well, you said you had a tax treatment question? Or?
Yeah, I was going to get into, has anybody heard about a flow-through thing, S-Corps, discount, 20%, any of the qualified business, any of that stuff? So I can talk a little bit about single member LLCs, but S-Corps were always something that was kind of popular with a lot of my clients, timers, business people in general. But it seems to be this year, everybody is asking about the S-Corps. Does it make it more attractive? Should I be in a C corporation? Is a C corporation better because of dividends? And again, I don't have a pat answer, but it's been my belief that the S corporation is becoming more popular than it was because of the qualified business deduction. Especially with the nature, the size of these businesses don't tend to be multi-million-dollar businesses, which, with the exception of Mark Roy, most of us have not multi-million-dollar timing businesses, so that that S Corp is very attractive, and it's worked out. When we looked at last year's numbers, it definitely was advantageous for us to be an S Corp in 2018. And that's one that I think that relates to that. Doing what I do, having the advantage of being an accountant and looking at that from a business standpoint, I really do think that worked out well for us. So if anyone's interested, that's kind of my perspective.
I think the one that maybe people could talk to you offline, I think you could give some people some interesting perspectives on, there's a lot of timers who over the next 10 years are going to be adding a family member in or be, selling their business. So Stacy took over the business from her dad, and there's a lot of complications that come with that, and probably her dad and her would have done it differently if they knew what they know now, And so I think, with a lot of people here, it might be very beneficial for you to kind of maybe have conversations with people that, because that's happening a lot right now is, new people are coming into the business, and if you don't have the business structure set up correctly, like you're kind of insinuating here, it can make it very hard.
It's something when a lot of businesses, when people get into them, the best advice that a lot of people give is, what's your exit strategy? Many of us didn't get into the timing business the same way we would other businesses to say, let's put out a business plan, let's say, what is our exit strategy? Because many of us treat it as a part-time thing that's grown, as opposed to, this is what I'm going to do for a job, and what is my exit strategy to get out of this? So the traditional business approach of, what's my business exit strategy for this business tends not to be applied here, and it should have been. So that's a very customized question, but I'm happy to chat with anybody about that. That's definitely something that should be discussed, especially with intergenerational stuff, for sure.
And so one of the things that I want to make clear is that, Matt is here as a timer to learn and be here, and he isn't trying to sell his accounting services. He wants to be just a friend to you guys, and if he can recommend someone that he knows, great. If there turns out to be a business relationship, that's okay. But he's a really unique asset in a number of people here, because there's a lot of us come from more of hey, we like running and stuff like that. Thank you so much, Matt.